Thank you for the introduction, Christy, and welcome everyone. It's a fantastic event here at Reed Corporate at the Ritz today. We've heard a lot about the energy transition and about copper metals and lithium and the like over the past few days. But one thing with the US dollar gold price touching $2,000 an ounce continually over the last month or so, and the Australian gold price, dollar gold price at $3,000 an ounce continually now, I don't think there's gold's losing its lustre in any aspect. What better way to take advantage of that to have a 3.2 million ounce resource in one of the best mining jurisdictions in the world? So at ROX, we're looking to build the value within the company. Over the last 12 months, we've made significant strides forwards to be able to take this project in development. We completed a transaction which we acquired 100% of the ROX asset now, so we bought out our joint venture partner, and that's allowed us to really unlock the value on what is an underexplored greenstone belt. The latest drilling program has been the first real program that has attacked some really high-grade mineralisation at surface, and we'll look to follow that up with future drilling. We already have 3 million ounces in resource, and we have a plan to take that project into pre-feasibility studies. We hope to complete those by around June next year. The idea will be is we're focusing on a 600 to 700,000 tonne per annum operation, looking to produce somewhere in the vicinity of 90 to 100,000 ounces per annum, and that'll be able to generate strong cash flows with all-in sustaining costs. That was listed in our scoping study, being around that $1,500 Aussie an ounce. We've got a simplified ownership structure now that allows us to do that and allows us to realise the upside opportunity at the project. Some of our peers here today at Bellevue have probably been the shining light in their ESG platform. High-grade underground gold mines have the ability to be really low carbon emissions for future developments. And Bellevue have really set the standard, and we aim to follow in their footsteps. Being located just out of Mount Magnet in WA, it is a Tier 1 mining jurisdiction. Penny West, Ramelius's high-grade underground mine that has 500,000 ounces at 17 grams a tonne, sits 20 kilometres to the south of our project. And Ramelius actually, their haul trucks go straight past our doorstep at the UME camp. And the consolidation of this gold belt really gives us a platform to conduct exploration programs over the area that haven't had the opportunity and haven't seen that level of investment because of that fractured ownership structure. Now we have the ability to really go to these areas and follow up on some of the results where you're seeing multiple double-digit style intercepts where there's been no follow-up drilling. We've got a supportive share register. Our major investor is Hawke's Point Capital. They own about 10% of the company. They have the ability to continue to fund us through into development. With Venus Metals as part of the transaction, they're another supportive shareholder. They hold 16.5% of the company, and they've made commitments to be there and see us through into production also. We have $5 million in the bank at the end of the quarter, with a further $2 million coming as a second transaction at the end of this year, which gives us the funding to be able to execute our plans over the coming months. We've got a pipeline of exploration focus, and this is everything from greenfields discoveries as well as advanced targets ready for resource development. We will aim to invest in this pipeline and really take advantage of that consolidated ground package. It is a highly strategic greenstone belt. There's 60 kilometres of strike here that allows us and is ripe for greenfields discoveries. The Currans Find project area, we released some results on Monday. This is an area whereby there was previous mining in the early 1900s. There was a follow-up drilling campaign that was done by Venus Metals in 2019, hit multiple intercepts going about 3 metres wide at 20 odd grams a tonne. We wanted to follow this up and have a look at the high-grade plunge of these areas. We drilled a few wildcat holes as well, and we hit another 6 metres at 5.5 grams from surface at 30 metres. This is an area where there's multiple plunging high-grade lenses. They're probably around 100 metres in strike, and you can see the surface expressions of these workings on surface. We'll continue to track these down depth, where we know in a fresh rock material you generally get more consistent higher grades. We're really anticipating some of the results that have come from our near mine follow-up. We had great success earlier this year drilling Paddy's Lode, and we defined a structure there that is around 100, 150 metres in strike, about 6 metres wide, running 8 to 10 grams a tonne. We'll continue to follow up Paddy's, but it sits under about 100 metres of depletion. So we conducted an IP survey over the area that gave us a better vision of what was happening at that depth. We have since drilled a number of holes targeting follow-up Paddy-style parallel lodes, as well as the main structure on the UME main lode, and some of the structures out to the north at Bunker. What we see here is the potential to add multiple areas right next to 3 million ounces we already have in the ground. Starting off as an underground mine at UME, we'll be able to continue to develop these areas, and they'll be able to add further ounces into our production profile. Paddy's and Midway have been two discoveries we've had this year. Paddy's, as I said, is about 100, 150 metres in strike, running 5 to 6 metres wide at 8 to 10 grams, still open at depth and still open on strike. We'll continue to look at Paddy's with follow-up drilling, and of course that'll be deeper diamond drilling in the future. Midway is again, probably we've defined that area now over about close to 200 metres of strike. It's open at depth, and we'll continue to explore that down plunge in the future. These two areas sit within easy access of the current underground workings. We will look to, in the future, as part of our scoping study, we've looked to dewater that pit, rehab the underground mine, and set up access to these areas. Over the last 12 months, we've been really looking to build the confidence in our resource. We had about 1 million ounces of indicated material and 1.9 million ounces of inferred material. Building the confidence in that resource allows us to put those ounces into feasibility studies. We've really targeted the link area because this area is close to surface, it's been well defined, and some of the results we've got out of there are just fantastic. When you start looking at some of the deepest holes we've drilled at Link, and they're going at 24 metres at 12 grams a tonne, this is a significant ore body. We've defined it over to around about a 400, 500 metre depth below surface. And when you look at the UME main lode, we still have drill hits that are going 970 metres below surface. That's the deepest drilling that's been completed at the project to date, and that ran 6 metres at 16 grams a tonne. I've got no doubt the more that we follow up the deeper intersections at Link, then that mineralisation will continue to depth. Where we've got the structure, where we've got the geology, we've got the gold. And we've improved our geological understanding of this area immensely over the past 12 months. We spent 6 months redigitising old mine plans that sat out in the mine site, archived in boxes, and using all that data to help define these structural lodes and really understand what's happening geologically here. Now, the scoping study was a early snapshot of what the potential of the ore body could produce. Now, there was a lot of inferred material in the resource that we could not include in this scoping study, and that was the reason behind a heavy investment in infill drilling this year. When you look at the production target, predominantly from underground mining, it's going at 5 grams a tonne. There are significant margins to be made when you're producing ore at 5 grams a tonne, especially when you're looking at your break-even cut-off grade is only about 2.5 grams. At all-in sustaining costs of $1,500 an ounce, there are significant margins to be made, and these costs are only 8 months old. The pre-production capital is modest, and what we found is, if you look at the success of companies over the last, few years, we really need to have a look at smaller scale production. It's less people, it's less labour intensive, and you're able to get higher grade production at a better margin. We do have a couple of non-core projects as part of ROX. We do have 200,000 ounces in resource just out at Mount Fisher. It is also prospective for nickel and lithium as well. So there is the potential to have a look at this project, and when capital markets improve, either selling it off or wrapping this up in its own separate IPO, because this area has the potential for a junior to really make some big discoveries. Our key focus is developing our project at UME and taking that into production. And that's about it. At ROX, we're looking to develop a high-grade underground mine. This project will have a long life. We've got a big resource base with significant potential to grow that resource and the mining areas to potentially add more ounces to that production profile. With the near mine discoveries at Midway and Paddy's, and then some of the follow-up IP targets, the best place to find 1 million ounces is right next door to an ore body where you've got 3 already. When we're having a look at some of our regional tenure, and we're looking at Penny West, for instance, our Currans Find project shows that when you spend some money in drilling these narrow vein, high-grade deposits, you can really find some substantial ounces. We'll continue to follow up and add value to the project, and we'll keep investors updated with news flow in the coming weeks on our IP targets. Thank you very much.